You're in your late 70s. You've built a life, a home, some savings, maybe a retirement account you've babied for 40 years. And you have exactly one kid, 40 years old, responsible, somebody you'd trust with your house keys without thinking twice. Here's the thing, though. You haven't told her anything. Not where the accounts are. Not what happens if you have a stroke next week. Not even whether she's getting all of it or just some of it. And the reason isn't laziness. It's not procrastination either. Not really. It's that talking about your own death, and worse, talking about money attached to your own death, feels almost rude. Like you're measuring out your love in dollar signs. So you say nothing. Year after year, you say nothing. If that's hitting a little close to home, stick around, because today we're breaking down a real letter from a couple in exactly this position. And the advice that came back is honestly some of the clearest, most useful estate planning guidance I've seen in a while. By the end of this, you're going to know exactly what to say, when to say it, and what paperwork actually needs to exist before any of it matters. Hello, I'm Anne. Welcome to my channel. This video is for educational purposes only and does not constitute legal, tax, or financial advice. Let me tell you about a phone call that happens way more often than people think. A woman gets a call from a hospital. Her father's had a fall. He's stable, but he's not able to make decisions right now. And the first question the hospital asks her isn't, "How are you feeling?" or "Do you need support?" It's, "Do you have power of attorney?" And she doesn't know. She's not even sure if her parents have a will. She's standing in a hallway, phone in one hand, trying to remember if she's ever even seen the name of their bank. That's the scenario nobody wants to star in. And it's exactly the scenario today's letter is trying to prevent, which is honestly what makes this one of the more useful letters I've come across. Because it's not someone in crisis asking what to do. It's someone being proactive, asking what to do before the crisis ever happens. That's rare, and it deserves to be taken seriously. Let's get into the letter first, because the details matter. A couple, late 70s, writes in. Their daughter is 40, described as responsible. That word's doing a lot of work in this letter, by the way. We'll come back to it. They mention something a little chilling, almost in passing. A lot of their family members, siblings, parents, aunts, uncles, passed away young. So this isn't some abstract, someday planning exercise for them. There's a pattern in their family, and they know it. Their question boils down to three things. When do we talk to our daughter about our finances? How do we talk about what happens if one of us loses the ability to make decisions? And the big one, the one they admit makes them uncomfortable, do we just leave her everything? Now, if you're watching this and thinking, well, obviously she's the only kid, who else would it go to? Hold that thought, because the emotional discomfort here isn't really about who inherits. It's about saying it out loud. There's a weird psychological thing that happens when people avoid naming an obvious outcome. As long as it's unspoken, it feels optional, reversible, soft. The second you say, everything goes to you, it becomes real, concrete. And concrete is scary when you're talking about your own mortality. So let's talk about what the actual advice was, because it's refreshingly unsentimental, and that's exactly what this situation needed. The first piece of advice: keep it simple. Aside from a charity here or there if that matters to you, when you've got one child and no complicating factors, no stepkids, no family members struggling with addiction, no drama, the answer to who gets it almost answers itself. One child, one estate, one beneficiary. The complexity isn't in deciding who. It's in making sure the paperwork actually says so. And this is where most families get it backwards. They think the hard part is the emotional conversation. Actually, the hard part, the part that takes real time and real effort, is the boring administrative stuff. Setting up beneficiary designations, updating a will, establishing power of attorney. The conversation is almost the easy part once the paperwork's done, because at that point you're not debating anything, you're just informing her. Here's a metaphor that might help this click. Think of your estate like a house under construction. The conversation with your daughter, that's the front door. It's the visible part, the part everyone focuses on. But if there's no foundation underneath, no legal documents, no beneficiary forms, no clear title transfers, that front door just leads to a hole in the ground. People spend so much emotional energy agonizing over how to open the conversation that they skip pouring the foundation first. Do it backwards. Foundation first, door second. So what does the foundation actually look like here? Let's get specific, because vague advice doesn't help anybody. You need a will. Ideally not a do-it-yourself online template. I want to pause on that because it's tempting. You see those $20 will kits and think, why pay a lawyer for something I can fill out myself in an evening? But estate attorneys who specialize in this stuff will tell you the DIY versions miss state-specific requirements constantly. A will that isn't witnessed correctly or that contradicts a beneficiary form can get challenged or just flat out ignored by a court. You're not paying for the document. You're paying for the document to actually hold up. Next, durable power of attorney. This is the one people skip the most, and it's arguably the most urgent. A power of attorney is what lets someone, in this case the daughter, step in and manage your finances if you become incapacitated. Pay the mortgage, file the taxes, keep the lights on, literally and figuratively. Without it, if something happens to your ability to make decisions, your family may have to go to court and get a conservatorship just to access your own bank account. That process is slow. It's public record, and it can cost thousands of dollars in legal fees, money that's coming straight out of the same pot you were trying to protect. And for this couple specifically, since they're married, the advice was, hold power of attorney for each other right now, while you're both capable, and name your daughter as the successor. So if one spouse can't act, the other can. And if neither can, she steps in. That's a clean chain of command. No gaps. Then there's the healthcare side of things, an advance healthcare directive. This is different from financial power of attorney. This is about medical decisions. Who can visit you in a hospital? Whether to continue or stop life support. These are decisions nobody wants to think about. But if you haven't written them down, your family is left guessing during the worst moment of their lives. Spouses typically name each other first, with the adult child as the backup. Now here's a stat that tends to stop people in their tracks. Depending on the state and the level of care needed, nursing home care can run up to roughly $125,000 a year. Let that sit for a second. That's not a one-time expense. That's annual. If there's no long-term care insurance in place and no planning done in advance, a single extended illness can quietly devour a lifetime of savings before any inheritance ever reaches the next generation. This is exactly why the advice pushes so hard on figuring out whether you have long-term care coverage now, while you're still capable of arranging it, rather than after a diagnosis forces the issue. Okay, so we've covered the legal skeleton: will, power of attorney, healthcare directive, long-term care considerations. Now let's talk about beneficiary designations, because this is the part most people don't realize is actually more powerful than the will itself. Here's something that surprises a lot of people. A beneficiary designation on a retirement account or a bank account or a life insurance policy will override what's written in your will. If your will says everything to my daughter, but your old 401k from a job you left 15 years ago still lists your long-deceased uncle as the beneficiary, guess where that money is legally obligated to go? Not to your daughter, to whatever's on that form, even if it's outdated, even if everyone agrees it's a mistake. So the actionable step here is concrete. Go through every account: bank accounts, retirement accounts, life insurance, brokerage accounts, and make sure the beneficiary listed is actually who you want. Add a transfer on death deed to the house if your state allows it, which lets the property pass directly to your daughter without going through probate. And probate is worth explaining for a second, because it's the word that makes this whole topic scarier than it needs to be. Probate is basically the court process that validates a will and oversees the distribution of an estate when there isn't a more direct legal mechanism in place. It can take months, sometimes over a year. It can rack up legal fees, and it becomes part of the public record, which means details about your estate aren't private anymore. The entire point of beneficiary designations and transfer on death deeds is to let assets skip that process entirely and go straight to the person you've named. Simpler, faster, cheaper, private. Now let's get to the part this couple was actually most anxious about, the conversation itself. Because paperwork is one thing, but sitting across the table from your kid and saying, "Here's what happens when we're gone," is a completely different kind of hard. The advice here is genuinely smart, and it's the part I think most people get wrong by overcorrecting in one direction or the other. Some families avoid the topic completely until a crisis forces it, a hospitalization, a diagnosis, and then everyone's scrambling, emotional, and trying to make complicated decisions under pressure. Other families do the opposite. One dramatic sit-down conversation, a binder slapped on the table. Here's everything, deal with it. Both of those approaches tend to backfire. The first because it's reactive instead of proactive. The second because it's overwhelming and clinical, more like a corporate handoff than a family conversation. The better approach is staged. Spread it out. Talk about it a little at a time over the course of a year rather than all at once. One conversation might just be about where the important documents are physically kept. Another might be about asking her directly whether she'd be willing to take on power of attorney. And notice that word, asking. This isn't an assignment you hand someone. It's a responsibility you request. And she has every right to say she's not comfortable with it, in which case you'd need a different plan entirely. There's a psychological reason staging it works better than one big reveal. When people get hit with too much information all at once, especially emotionally loaded information, they tend to either shut down or fixate on the wrong details. Spacing it out over months gives everyone room to actually process each piece instead of just reacting to the size of the whole picture. And here's the line from the advice that I think is the real emotional core of this whole thing. Keeping your daughter informed about your plans is basically the same as telling her, "It all goes to you," without ever having to say those exact words. You don't need the dramatic announcement. You don't need the moment with everyone gathered around a table like it's a movie scene. The information itself, shared gradually and honestly, communicates the decision. The transparency is the message. Let's talk about why this matters beyond just convenience, because there's a deeper psychological piece here that explains why so many parents avoid this conversation in the first place. A lot of people conflate talking about death with inviting it, almost superstitiously. Like if you don't write the will, you won't need it. If you don't talk about the power of attorney, you won't ever lose capacity. It's magical thinking, but it's incredibly common, and it's exactly backwards. The families who have these conversations early are the ones who get to have them on their own terms. Calm, unhurried, even a little bit warm. The families who wait are the ones having this conversation in a hospital waiting room, under fluorescent lights, making decisions in 20 minutes that should have taken months. There's also something worth saying about what this kind of planning actually gives your daughter, beyond just money. If she's the one who'll eventually be managing all of this, knowing where things are and what your wishes are isn't just helpful to her. It's a gift in the most literal sense. It removes guesswork during the worst weeks of her life. It means she's not trying to locate a life insurance policy while also grieving. It means she's not guessing what you would have wanted regarding hospital visitation or life support. You're not just leaving her assets, you're leaving her clarity. And honestly, clarity might be the more valuable inheritance of the two. And on the financial side, if she's driven, has her own career, maybe a mortgage of her own, receiving a clearly organized inheritance outside of probate could be the difference between being financially stretched and being financially secure. It could mean paying off a mortgage years early. It could mean a down payment on a home. If she eventually has kids, there's even the option of setting up a tax-advantaged 529 plan for their education, funded as part of this broader plan. None of that requires a single dramatic conversation. It just requires the paperwork to be right and the information to be shared. One more practical point before we wrap this up, because it's easy to miss. Safeguard the actual information, not just the decisions. Store your documents, your account numbers, your passwords, your insurance policy details somewhere secure. And yes, tell your daughter where that is. This protects two things at once. It protects her ability to act quickly if she needs to, and it protects all of you from the very real risk of bad actors getting access to financial information that's been left lying around or stored insecurely. Security and transparency aren't in conflict here. You can be careful and open at the same time. So if you're watching this and recognizing your own family in this story, here's what I'd actually do, starting this week, broken into pieces small enough that none of them feel overwhelming on their own. Step 1. Make a list of every account you hold. Banking, retirement, brokerage, life insurance, the deed to your home. For each one, check who's currently listed as beneficiary. This is the single highest impact task on this entire list, and it's also the most commonly neglected, because people set these up once, decades ago, and never look at them again. An afternoon with a notepad and your online banking logins is often all it takes. Step 2. Talk to an actual estate planning attorney, not a template website, about your will and your power of attorney documents. Yes, it costs money up front, but compare that cost to what a contested estate or an emergency conservatorship proceeding runs. Often many thousands of dollars in legal fees stretched out over months, paid by the very family you were trying to protect. The upfront cost is the cheap version of this process. Step 3. Look into whether you have long-term care coverage, and if you don't, find out what it would cost and what it would cover. Given that nursing home care can run well over $100,000 annually, this single policy decision can be the difference between an estate that survives to be inherited and one that gets consumed entirely by care costs in the final years. Step 4. Pick one low-stakes moment this month to start the conversation with your kid. Not the whole conversation, just the first piece. Maybe it's mentioning where the important documents are kept. Maybe it's asking gently whether she'd be willing to consider holding power of attorney someday, with no pressure to answer immediately. That's it. That's a complete, low-pressure opening line, and it's enough for one conversation. Step 5, and this one's easy to forget. Revisit all of this periodically. Life changes. Accounts get opened and closed. Relationships shift. Health changes. A plan made once in your 60s might need adjusting in your 70s and again in your 80s. Treat this less like a single project with a finish line and more like routine maintenance, the same way you'd service a car you intend to keep driving for years. Because here's the truth underneath all of this. The conversation people dread the most is almost always smaller and easier than they imagine once they actually start it. It's the not starting that creates all the anxiety. The actual words, once you say them, tend to land a lot softer than the version you've been rehearsing in your head for years. You've spent decades building something for the people you love. Don't let silence be the thing that makes it harder for them to receive it. Start the paperwork. Start the conversation. Do it in stages. Do it this year. And let clarity be the gift you give alongside everything else. If this helped you think through your own family situation, you know what to do. Like it, share it with a sibling or parent who needs to see it, and subscribe for more breakdowns like this one. See you in the next video.